Okie dokie. Okie dokie, everyone. Can I start off by saying either a good morning or good afternoon or even a good evening, depending on where you are around the world. And welcome and thank you for joining me tonight on tonight's new episode of the Discover Trading Series, which tonight is called Discover Candlestick Patterns Part 1, written by myself, which is James Alexander. He's the Chief Market Analyst here at Wise Bank. Now, let's start off with a little bit of a brief introduction on myself. Like I say, my name is James Alexander. I'm the Chief Market Analyst here at Wise Bank. I have over 20 years experience in the financial service industry. I actually started out in the financial services industry at the age of 18, where I started off doing mortgages for commercial properties. I then went into pensions and alternative investments before entering trading arena around about 15 years ago. I'm now 40. So that's how I started. I've actually traded myself through a prop company, went into portfolio management, which I still do now, before moving into a little bit into education, etc. Hence tonight's episode and me presenting this material. I'm indeed a published writer, and I've been published in several leading publications, including the likes of the Financial Times Advisor, Market Watch, which is the Wall Street Journal, several newspapers and magazines, and I'm a very passionate and avid market commentator. I've also spoken at several leading industry events around the world, guest speaking several of them, including the likes of Hong Kong, Singapore, Dubai, Kuwait, Qatar, South Africa more recently, London, obviously as you can tell I'm a Brit, and indeed Berlin. Now, tonight's agenda, like I say, this is part 1 of how to discover candlestick patterns. And initially, we'll talk about the different chart styles. Then we'll go into what are candlestick patterns. Then we'll go into an introduction on some of the different patterns. Like I say, this is only part 1, so we'll be covering all the patterns tonight. Then we'll do a little discussion on future educational events. And then we have the usual question and answer session at the end. So if you have any questions for me, please hold it till the end. So, let's face it, there's so many different chart styles. We have the likes of the line. We have the likes of the area. We have the likes of baseline. We have the likes of the bar chart. But the most popular, especially when it comes to Forex and currency trading, is indeed candlestick charts. And the reason why it's so popular is because it can give us so much information. So this is what a candlestick looks like. Okay. Now, candlesticks display a movement in price of an asset in graphical form. Depending on your selected time period, each candle represents a chosen unit of time. That sounds really interesting, James. What does that actually mean? Well, for example, let me get my little flashy pen as well, so helpful display, laser pointer. Here we go. Right. For example, so you say, for example, you chose 30 minutes on your chart. That means each bar, which he calls the body of the candle, represents 30 minutes. So this would be 30 minutes, and this would be 30 minutes. Now, for this illustration purposes, and probably most standard candlestick charts, a green candle is showing that the asset closed higher in that unit of time, and a red candle is displaying that that asset closed lower in that unit of time. Now, here's the thing. So keep it, say 30 minutes. So the bottom of the candle, or the bottom of the body of the candle, shows where the asset opened in that period of time. The top of the body shows where the asset closed in that unit of time. So if it's green, it's bullish, that means up. If it's a red candle or a bearish candle, the top of the body shows where the asset opened in that unit of time, and the bottom of the body shows where the asset closed at that unit of time. Then you have these long lines here, okay? And they're called wicks. They will show you where that asset went to as the high in that unit of time on both, and at the same time, the low that asset went to in that unit of time. So this is why candlesticks are so popular, because it gives us so much information in such a simple graphical form. And this is why they tend to be very popular with traders. They tend to be followed a lot. And here's the thing. So what traders look for? By looking at it, we can see a lot of information. Okay, the open, close, higher, bullish, bearish candle, the wicks, where the low and high. But if we look closer, or even closer, we can start seeing certain patterns. Now, here's the theory. Traders look for certain patterns to determine the buying and selling behavior of the market. The theory is that certain patterns can possibly indicate future movements of an asset. Now, here are some of the patterns that traders look for. One is called the hammer and the inverted hammer. The hammer is known as a bullish reversal pattern. So traders look for it, as some believe that it indicates an end of a downtrend. So this is what a hammer looks like. Small square body with a long wick either below it, or an inverted hammer again shows us the same potential end of a downtrend. Looks like this. So an upside down hammer. Now remember, these patterns have to form at an end of a downtrend to indicate an uptrend. If the market is ranging, it doesn't work. But if the market is on a downtrend, you see it on a downtrend, this is where traders believe the market will then reverse. So let's look at some examples. This is the British pound US dollar daily. Remember, end of a downtrend. And straight away, we can see one. Market's on a downtrend. A lot of selling pressure. Hey presto, an inverted hammer forms. And what does the market do? Starts to buy in again, pushing the asset higher. Market goes on a downtrend again. Then what forms? A hammer. And guess what? The market then goes on an uptrend. Downtrend again. Inverted hammer starts to form. And guess what? The market then goes on an uptrend. Big downtrend here. What happens? The market forms an inverted hammer. And guess what? The market reverses and starts going on an uptrend. Downtrend again. Hammer forms, both a hammer and an inverted hammer. And guess what happens? The market goes on an uptrend. So remember, this pattern can only works, only recognized on an end of a downtrend. Not when the market is ranging, because we can see here the market is ranging. There's an inverted hammer there, so it's not working. It only works when the market is on selling pressure. Okay? So that's a hammer, an inverted hammer. Another popular pattern looks like this. And this is the bullish engulfing pattern. This pattern basically potentially indicates, again, a reversal in a downtrend. So it can only happen or only occur when the asset is in a downtrend. So the theory is you have a bearish candle, remember the red candle. If it's totally engulfed or engulfed by a bullish candle, then it indicates a change in direction. Here's an example. This is again the euro dollar, again on a daily. Excuse me. Downtrend, 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 downtrend. what happens? We have a bullish engulfing candle happens, and the market reverses its direction back to an uptrend. Let's look at another one. Sorry, I'm going to have a sip of my coffee because I'm talking. This is a morning star. Now, this consists of a 3 candlestick pattern and consists of one bearish candle, a smaller bullish candle, followed by a larger bullish candle. This is what it looks like. So we have our bearish candle. We have our small bullish candle. And then we have our larger bullish candle. Again, traders look for this pattern to try and recognize a potential bullish reversal. So again, this occurs at the end of a downtrend. Let's look at an example. Euro sterling on a daily. Downtrend, downtrend, downtrend. Guess what we can see there? You can see the morning star indeed forming. And what happens? The euro reverses its direction against the sterling and goes higher. Now let's look at some bearish patterns. The shooting star. Now this pattern looks a little bit like the hammer and the inverted hammer, but instead of forming at the end of a downtrend, it forms at the top of an uptrend. And again, this is what it looks like. Okay. Again, traders look for this pattern to spot a potential bearish reversal of an uptrend. So they look for this to realize they might need to start selling the asset. And this is the euro dollar 1 hour. And this is the thing about candlestick patterns. It can be used on many, many, many different time frames. So we've got the euro dollar on 1 hour. Straight away, I can see a couple here. So uptrend, morning, falling star, downtrend. Uptrend, can we see what's forming here? Falling star, downtrend. Again, uptrend, what forms there? Falling star, downtrend. Let's look for another example. This is the dollar Japanese yen, this time on a daily. Uptrend, falling star, downtrend. Uptrend, falling star, downtrend. Uptrend, see a nice uptrend, falling star, downtrend. Uptrend, falling star, asset goes lower. As well as the bullish engulfing candle, you, of course, have the bearish engulfing candle. And it's basically the opposite of what it looks like. So basically, you have a bullish candle, which is then engulfed by a bearish candle, which again needs to happen at the end of an uptrend. Okay, not arranging, an uptrend. And again, traders look for this, this pattern to try and see or identify if there's going to be indeed a bearish reversal. And this is what it looks like. An example, this is the British pound US dollar, uptrend, 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 nice steady, bearish engulfing candle engulfs that candle, and then look what happens, downtrend. And here's another pattern. This one is the abandoned baby. They come up with some amazing names for these patterns. And this is a very, very rare pattern to find. Okay, because a bullish abandoned baby pattern again potentially indicates a bullish reversal. It looks like this. Say it's on a downtrend, it forms like this, a very, very small body, and there has to be a pretty big gap between the previous candle and the bearish candle, on this case, because it's a bullish abandoned baby, has to be a pretty big gap, and then you'll see a gap of another bullish candle above that to indicate a change in direction. You know, and there has to be a gap, like I say, between the abandoned baby and the bullish, and abandoned baby and the bearish and the bullish, and the body has to be very, very small. So it has to be a tiny body. And like I say, it's an extremely rare pattern to find, but it's useful because it alerts traders for a change in direction. And you can often see these maybe in stocks, actually, stocks in particular. And this is why my example, I've chosen the Amazon Daily. Okay, there's a gap here between that candle and the abandoned baby, very small body. And then there's a big gap between the next bullish candle hinting at changing direction. So the market was heading on a downwards trajectory. Then we had the abandoned baby. And indeed, the market then reversed and started to move higher. Now, like I say, this is only part one. Part two, I will do in the next couple of weeks for more patterns. But other educational events the rest of the month, these include the likes of the following. On the 17th of January, my new episode will be Discover Why Fundamentals Matter. I'm a big fundamental analyst. Easy for me to say. So that will be a big one as well. It'll be a slightly longer one. So please feel free to join me on the 17th. Then on the 24th of January, we have Discover How to Trade Breakouts and Fakeouts, another technical based episode, followed by the 31st of January, we'll be discovering correlations and hedging. Again, that's a very good episode because certainly if you're looking to hedge your trades, correlations or recognizing correlations or understanding correlations can be very, very useful. To contact me, feel free to email me at james.t@wisebank.com, or indeed, you can indeed follow me on my Twitter account, which is at James Alexander T. It's a new account. So I'm, building it up, but please feel free to follow me or direct message me because I do share chart patterns and things I recognize in the market and say, whoa, look at this. This is worth looking at. So yeah, feel free to follow me on my Twitter if you'd like to. Now, with that out of the way, is there any questions on tonight's episode? Anything anybody would like to ask me at all? Any questions in relation to candlestick charts or patterns? Anything at all? Feel free. Marco, Sean, would like to ask me anything? Any questions at all? Don't be shy. I'm not going to bite. I promise. I'm definitely not going to bite. I'm quite nice, really. Okay, did you at least find it interesting and insightful? Did you enjoy the episode at least? Did you find it useful? Did you enjoy it? Here's another question I'll ask then. Is there any, because obviously I write these episodes and I write this material purely for your knowledge and to help you grow as a trader. Is there anything in particular you'd like me to write in the future? Maybe you want me to do a topic. James, would you mind doing a topic on, I don't know, Elliott waves, for example? Or could you do a case study on how to trade the S&P 500? Anything like that. Because I've got quite a rounded knowledge base. If there's anything in particular you would like me to write or cover, please feel free to let me know. Tell me, is there anything in particular you'd like me to do? No? Anything? Anything at all. Please feel free to ask me anything. Or make any suggestions. It's entirely up to you. Okie dokie. Well, if you think of any questions, maybe for another time, like I say, feel free to either email me at james.t@wisebank.com or direct message me on Twitter, which is at James Alexander T. So till next time, till next week, can I wish every single one of you a fantastic day, and depending where you are around the world, either a good morning, good afternoon, or good night, depending on where you are around the world. Till next time, all of you have a fantastic time, and all of you trade safe.